Hello guys, and welcome back to another weekly market update. Last week we had the prices of oil barrels trading above $100, and that's due to the geopolitical situation in the Middle East. Now UAE leaving OPEC is opening a positive door for the near future where prices of oil can go down because of the necessity of Strait Hormuz not to be looming in the horizon anymore. However, this tension was what dominated markets in the previous week. It wasn't really the positive data and reports, especially the positive GDP we got on the United States dollar. And that weighted stocks and pushed more inflows into bond yields in the previous week. So we saw, because of the dominating risk of high inflation to remain there because of the energy sectors not being able to perform well because of the situation. And we saw banks like Bank of England, Feds and ECB are more likely to hold interest rates the same way they are for a longer period of time. Let's see how that's looking on charts. All right, everyone, here we are starting our weekly market outlook from the technical side. Now, starting with stocks or AI-related stocks, Nasdaq. As we had anticipated in the previous week, we were looking for a retracement to that support and then a movement up. If you see the dots, it was also about 27,600 to our target. This is exactly what happened. Yes, we are that good at it. Come and learn from us with modesty. All right. So looking at our outlook, it remains the same. We're still bullish on AI-related stocks with an optimal target of 28,300. That's if you are buying for a short term, but if you are doing trades, then you optimally want to see another retracement if you haven't entered already, and then continuation to the upside. Now, there is an alternative scenario where we have this little bull flag, so we could see a further movement to the upside. We can see there is another trend inside this trend, and market retraces then to that support. Could show us some big red candle, like usually what Nasdaq shows us when it retraces, as you can see. And yes, history repeats itself most of the time. And then we can see that continuation to the upside. Of course, you'd always need to see a confirmation before you enter there. And there is a slight bearish movement that happened on AI-related stock. This actually wasn't due to anything. In fact, multiple revenue reports were positive upon multiple AI-related stocks like Microsoft, Apple. We still saw some movements to the downside as in price of these stocks. This is not actually because of data or reports, because even GDP was positive, the one that was released in the previous week. But this is actually due to, I'm not going to say a short-term sentiment, let's say a flashy sentiment of investors due to the geopolitical situation. But guess what, guys? Since because UAE had officially exited OPEC, now they are not entitled to follow instructions regarding production, and there are already actually some companies like ADNOC expanding outside offshore with huge investments projects, which shall reflect on a better production in the near future, which shall push the prices of oil down. Matter of fact, some traders, investors already seeing that, and oil is being shorted as we speak. No, not as we speak right now, because right now it's Saturday, markets are closed, but you guys get what I'm trying to say, right? So that's about that. I'm not going to dive in details in the subject. If you guys want to know more about it, feel free to reach us out or drop a comment about a certain thing that flows in your head, and we shall get back to you on it in the comment section below. So this is about Nasdaq. We're still bullish on it with the same target I highlighted earlier, which is 28,300. So this is about that. Going into gold, we had spoken about gold in the previous week, and I told you it's gonna be a volatile week. Not volatile, actually, could be a tricky one. And we gave a certain number that market didn't break above it, and our target was 4,620. This is exactly where market moved, and we saw actually like a very decent target. Okay, it's a little bit below that. I'm not the best at drawing lines, guys, horizontally. You know that. So, you know that if you're following. All right, so here's something about gold. You guys know that we've been very good at predicting this price movement, especially with all the chaos. Well, chaos and order are actually two faces for the same coin. They're not really separated apart. Anyways, yes, Gold is bearish, as in it broke below the support, made a retracement, and it makes sense for a continuation to the downside. But I'm going to tell you something that probably nobody is highlighting nowadays. So we can see on the 23rd of March, gold had crashed, and that was after the geopolitical tension escalated, the prices of oil skyrocketed, etc., etc. Now notice right now, perhaps we are, I'm not going to say in a worse situation, but yes, UAE left OPEC, which means there's no more participation of UAE into the control of the global export of oil. And the truce that was claimably to perhaps reach to a better outcome still didn't. So even though, and whoever had reserves of these countries nowadays that it's being consumed, this and that happening, we can see that gold did not actually fall below that price. Matter of fact, it stayed holding a very, very higher price than the price it had reached to when those things escalated. So this reflects as a sentiment that the prices of gold are not necessarily to be pushed further down. Yes, I still hold that I'm seeing gold to go to 6150. Yes, some banks had decreased their expectations to 5,700, etc., etc. But this is a goal ultimately to be reached due to inflation, etc., etc., and all of these package bundle altogether. Now, looking at gold technically, after this movement down, we've had multiple rejections, multiple dojis, and a bullish pattern that made gold go up as a retracement after this breakdown. All right. So, however, according to understanding these candles, we are seeing institutional interest actually in gold at these prices. And even if gold moved down, as long as it is still in this range, this is actually a very, very strong demand zone right now on gold. So yes, there is a decent possibility it could fall down if the circumstances remain the same as in fundamentals. However, we could see signs that this may not be the case, right? And we are actually technically we're seeing these signs right now as in technical analysis. So we could see gold starting to move up, right? So I wouldn't necessarily recommend you to short gold right now, right? And even on a daily time frame, we can still see similar confluences on a 1 hour time frame. So yes, overall trend is bearish, but we're getting those cooking or this phase where market is cooking for that bullish movement, right? So be cautious if you're looking to trade gold. And if this level breaks, as in below this price range here, yes, we can expect a continuation to the downside. If it doesn't, then don't short it, all right? So yes, I always recommend retracement trades, and now gold is at a resistance where market had retraced to it. So if it is bearish, we should short. This is how I advise people to do. But this time, we are going to go for a breakout trades if it breaks below. Don't short it from where it is. Of course, none of what I say is a financial advice. It's all just for educational purposes. This is why you guys are following us, and we are an educational institute. So life is good. We go to the next asset. Looking at Euro USD, well, we did expect more power to be there on Euro. And I'm going to say, yes, there is still bullish sentiment upon the Euro, because think about this. All these AI related stocks, people investing in the US economy, all these bonds to the United States dollar being bought, all these oil trades that are being took against the dollar because it's still traded by the dollar, it demands investors to buy dollar in order to fulfill all these investments and trade, right? To execute them. So this is causing a huge, strong demand on the dollar. And this is what, this is how it's working, by the way. And all of that pressure on Euro because of the demand on the dollar for the whatever I had highlighted right now, we can still see it consolidating. All right, so this gives us a very solid, understanding that Euro is still powerful. Okay, So from here, we can expect a further consolidation. We got strong confirmation from this resistance, but notice we're not anticipating it to break below, and this is actually because if it wanted to break, we should have seen that break already below, because market had retraced that trend line, this resistance, and moved down, and there is an unfilled fair value gap here. So it should have continued down, but at this price here, we see at the support, we see strong demand on Euro USD. So this is why we expect it to consolidate, right? I think whatever is happening is already being prepared for, all right? Now, we just haven't had these fundamental supports to push the prices in the directions we are anticipating, all right? Now, going into Bitcoin, we did highlight we were expecting approximately 80K as a target, but I spoke to you guys that there is a very high possibility where we see market breaking down to this support. And this is exactly what happened. It broke this support and gave us a very strong panic sell. I'm not going to say panic sell. Well, I just did say it. Take it as you wish. All right. From there, it was a very big bearish candle followed by a doji at the support. We had spoken about that Bitcoin is very likely to fall to it, but we're still bullish on Bitcoin. All right. So what we're seeing here is multiple possibilities, right? It could continue moving up a little bit. It could actually retrace, consolidates, could form sort of a cup and handle before a continuation to the upside. So I wouldn't advise to go for a weekly trade on Bitcoin right now, right? If you have your entry at 65K, the one we have been spoken about, 65 to 70, then keep it, then hold it as a recommendation, not advice. But if not, go for day trades. Multiple things can happen because overall, yes, we are bullish on Bitcoin, but these geopolitical tensions are causing sentiment to be more bearish, let's say, on assets that shouldn't necessarily be, all right? So that's about Bitcoin. Going to Nifty 50, well, we can see that Nifty 50 is pretty much retraced from that resistance and found support here, and it is consolidating. We could expect a move into the upside from here, an attempt to break above that resistance again. Why? Because we have some sort of diamond pattern here and also a bull flag. So we could expect a movement, as in bullish movement on Nifty 50 to come, technically. Now, according to the energy supply and all of that, it's not really optimal for markets, but still we're seeing bullish sentiment because investors right now, they are not buying because of this short-term geopolitical situation. It's not even a short term. I would preferably say it's even shorter than a short term. But they are investing and buying for the future, right? And this is what we do. We analyze, predict the future. We always trade for the future, not for the time being. And these slight bearish drops, guys, as we saw on Euro USD, Bitcoin, and also some stocks, as I've highlighted earlier in this video, all of it is just because of this circumstance. So I'm taking it as an analyst, as in a panic sentiment upon the situation. But overall, future is always optimistic. Bright future, hopefully. All right, that will be it for the technical part. I'm gonna pass the mic to Mr. Amedian from London to give you guys more insights about what happened and fundamentals in the previous week and expecting things for the upcoming ones.
Brilliant. Thank you, Samir, for sharing your analysis. Here is Amir Amedian, Master of Finance and Investment student in UK and also financial market analyst at Xylostar. Donald Trump stated that they are going to continue the blockade on Iran's port. And also last week, we got the megacap earnings in the United States, which completely changed the vibe and the sentiment of the financial markets. Let's have a look. Greetings everyone, welcome back to the weekly market update hosted by Xylostar. So last week, financial markets were packed by so many news such as economic indicators, central bank speeches, and also monetary policy statements, plus the US equity earnings. Let's jump into it. First of all, initially I want to start it with the US equities, as the US equities ended the week higher, which was led by tech, with the Nasdaq and S&P 500 hitting fresh record highs as a strong megacap earnings fueled by rally and AI optimism stayed dominant, which again led to positive markets reaction. The second chapter, as mentioned earlier, is about the central banks. The Bank of Japan held its interest rate at 0.75% last week, but the decision was notably divided, with 6-3 split vote. Inflation forecasts were raised, driven by rising energy prices, suggesting the Bank of Japan may be preparing for a future tightening cycle despite the slow growth. In the United States Central Bank, the Federal Reserve held interest rate as well as 3.75%. The decision was made by 4-8, and also it showed another data-dependent approach and a cautious stance from the Federal Reserve. The economic activity remains stable and also the employment, but inflation is still somewhat elevated. They mentioned, especially in the latest statement from the FOMC meeting, that the geopolitical tensions, particularly in the Middle East, is pumping the fuel and also inflationary pressures to the US consumers. After the meeting, Jerome Powell, ex-chairman of the Federal Reserve, highlighted the US economy is in a good shape, but geopolitical tensions and the latest update from the Middle East and also Persian Gulf is going to reinforce the Fed to keep the interest rate for the longer term. The next is the Bank of England, as the Bank of England also kept its interest rate at 3.75%, and also policymakers acknowledged some easing ahead, but stressed that inflation still needs to cool down. And eventually, ECB, European Central Bank, kept its main refinancing rate at 2.15% and followed a same approach like the other central banks. From the economic indicators, last week we got the first release, or better to say flash GDP numbers for the first quarter of 2026 from the United States, as the GDP grew by 2%, and also from the previous period it revised down to 0.5% for the fourth quarter of 2025. It was driven mainly by a stronger investment, exports, and government spending. The upside was partly offset by weaker consumer spending and higher imports, even as underlying domestic demand continued to improve. The next one is about Canada. Canada's economic growth slowed in 2025 compared to 2024, with the real GDP expanding in almost all provinces except the Northwest Territories, which contracted for the second year. Let's have a look also at the geopolitical updates, as Donald Trump maintains the pressure on Iran while signaling a possible conflict de-escalation, but energy checkpoint risks remain active. And also, UAE and Iran tensions are rising due to the Strait of Hormuz and geopolitical alignment shifts, keeping the oil volatility elevated. Now, let's have a look to the upcoming week. For the next week, the main employment numbers, or better to say employment indicators, will be released from the United States, as we are going to get the NFP numbers on Friday. And also worth to be mentioned that the Australian Central Bank will release the cash rate, and it's also at the center of attention. At the middle of the week, some economic indicators such as ISM Services PMI and also JOLTS job opening numbers, which is a strong indicator to track demand in the employment, or by say labor market in the United States. Before winding up this session, I just want to talk about the corporate earnings for the next week in the United States, as AMD, Walt Disney, PayPal, Shopify, and Palantir are going to release their corporate earnings by the next week. Stay tuned with Xylostar. See you next week.
Thank you guys for watching. Don't forget to leave a like. You have something to say in your mind, leave it down in the comment section below or get back to on it. Have a good week.